this thing working? Are you working? Oh, hello. Hi, Internet. I'm back. So, I'm now going to switch to a different topic. And that's the topic of trading, which, as a marketer, is relevant because you can use information about trading for marketing purposes. For those of you who aren't sure about how to do that, I've done videos on that in the past. You can click on my channel and find information about that. So there's definitely older videos from even a few years ago and more that explain how I use trading information for marketing purposes. But those are certainly not videos about how to trade. And that said, I've obviously done a lot of research and learning and trading over the years, and started a group called Alpha Trading with about 5 other amazing co-founders. And we put this group together, built a little community on Discord, built some incredible trading tools, which are, in my opinion, the best trading tools available to retail traders. And the reason that I say that they're the best, well, obviously you can go look at our YouTube channel or jump into our Discord or see our videos on TradingView or see them on Twitch, because all that stuff is up there. And we have a website, alphatradinghq.com, and you can join the community for free. And that's the Discord and all that. Anyway, back to the topic at hand. The reason that I say that our tools are the best for retail traders is for the following reasons. First of all, they use the highly relevant maths that the actual huge bots that are used by the high frequency trading firms and the big quant shops, companies like Citadel and other high frequency trading firms, or D.E. Shaw and other quant shops use when they run their ginormous bots that actually move anywhere from 70 to 90% of all trades on any given market, on all liquid assets in markets around the world at any point in time, and certainly in the US markets and other big markets. Now, how do we know that they're running most of these trades? Well, we know they're running most of these trades because their bots, right, their algorithms, right, are running millions of trades per second. Tell me how many trades per second you're running. Right, the average duration of a trade run by an HFT firm is 0.2 seconds, and that's as of several years ago, which means it's probably even far less than that now. Might even be, who knows, 0.1 seconds or something. Whatever it is, it's a ridiculously small amount of time that you, as a manual trader, there's no way you can actually compete with that, right? To run millions of trades per second manually and have each one last 0.1 seconds. So maybe you think, hey, I can use a commercially available bot that I can buy for $50, $100, $500, $1,000, whatever it is. You can't. Okay. These big firms that run these gigantic bots invested once upon a time many millions of dollars into building their bots. And they have gigantic staff around the world that manage these bots. Everything from building them to supporting them, to troubleshooting them, to managing the trading on them, to managing the traders on them, etc. And they have enormous resources at their disposal. And they've invested huge amounts of money over the years, such that their bots are really not multi-million-dollar bots at all. They're bots that have been the recipient of investments upward of $1 billion or more in many cases. And that is not a joke. And if you think that a commercially available bot to a retail trader, paying hundreds of dollars or even $1,000 or even $5,000, can compete with a bot that has had billions of dollars or hundreds of millions at the least invested into it over the last decade or more, I got news for you. This is not going to happen. You do not have a chance using your little bot to outpace and outtrade the gigantic bots. Now, doesn't mean you can't use bots at all. No, it doesn't mean you can't use bots at all, but it means your bots do not have a chance against their bots. So the best you can do with your bot is to use it to execute trades faster than you might be able to, but only if it's given the parameters that you would normally trade manually, and you still have to monitor it to make sure it doesn't mess up. Because guess what? Ding, ding, ding. They mess up a lot. And I mean specifically the commercially available retail bots. Right? Those things are not designed to be without flaws. They are not designed to trade without failure. They have a failure rate built into them, and the people that sell it to you will even tell you, our bots work 99% of the time. Our bots work 99.1% of the time. We guarantee 99.5% of the trades. We guarantee 99.9% of the trades will execute, right? Guess what? If 0.1% of your trades fail to execute and you're running 100 trades in a day, okay, maybe that won't affect you. But if you start to get smart and you start to run loose and fast, or fast and loose, and you start to have trades that are going 1,000 trades a day, that means that one of your trades, at the very least, is going to fail using your bot. And while you may think, well, what do I care if one of my trades fails to execute if I'm using a bot? Well, what if you intended to close a position and it failed to do that? That's going to cost you. And what if you made a stupid mistake and fat-fingered that trade on the position entry, and you're trying to get out of it and it fails because your automatic thing doesn't work and you're not monitoring it, and you come back to your computer or you come back to that screen only to notice it's massively in the red because of a very volatile move that you weren't paying attention to because you trusted the bot. That is why, if you use bots, you absolutely need to monitor them. And that kind of defeats the purpose of using them, except for the fact that you may be able to execute more trades than if you just learn to become a fast trader and trade occurrences of opportunity when there are inefficiencies to exploit in an inefficient market, which is mostly random. And when it's not random, it's trending. And those are the two states of markets. They are either random, as in on a random walk, or they are trending, as in a trending move. And in both of those cases, price action follows the returns. Right? I've spoken about this many times, and we speak about it all the time within the alpha trading community. Returns are what matter, because returns mean revert. Returns, meaning log returns on investment, are what you are trying to gain as a trader. If you're looking to gain, based on price action, you're fooling yourself, because again, markets are random. The best thing that price action will do is follow the returns. Now, we have also discovered at Alpha Trading, in some of our discoveries, and specifically with the RMLR indicator that we built, that our brain trust built, our math genius built, and our beta testing or alpha testing traders discovered, myself and others, that not only is it true that returns mean revert, price doesn't, but past price action does in fact indicate future returns of a very specific kind. And that is something that every financial planner, every financial commentator, every financial analyst, every investment banker, And everybody else who's trying to sell you a financial vehicle or a financial product or a financial service will always tell you past price action does not indicate future returns. Well, I'm here to tell you something. That is a lie. And we prove it every day. And we prove it every hour and every moment. We discovered that. And we show it on one of our indicators. Our RMLR indicator demonstrates visibly that not only does price action indicate future returns, specifically reverse mean of log returns, but we have a very nice indicator that shows you exactly how it does that and exactly where the points of outliers are, meaning 2 or more standard deviations away from that mean. And we can tell you exactly something like when price action stops hitting the 3rd standard deviation of a RMLR, once it has stopped hitting it for 2 candles or more, it is effectively in mean reversion. In fact, the mean reversion can even happen on a candle where it hits the 3rd band, and on the very same candle, it can mean revert completely to the RMLR in question. And that is a massive discovery in the world of trading that was made by the traders of alpha trading. We figured out that you can predict with extremely high accuracy when a mean reversion is actually happening and when it is likely to complete. And because of our other tools and that one, we figured out whether or not you can tell if that is going to happen to the upside, the downside, or sideways. And it's good for every asset on any time frame. So put that in your pipe and smoke it. Again, the RMLR is able to predict mean reversions, mean completions, mean reversion completions, and moves away from the mean with extremely high accuracy. Now, what does that mean? It means that the RMLR is an extremely accurate laser beam into the future. Literally, it's like a drill that pokes through the shield of what previously was thought to be the impossible to know, and that is the future direction and the future returns. Well, since what matters in trading is the returns, and we figured out how to predict that, it means that our tool, our RMLR indicator, is literally like a laser beam into the future, piercing through the wall of the unknowable and giving us a perfect view, or a very nearly perfect view, into what is likely to happen. What are the probabilities of the returns into the future? And it can be 10 candles out, 30 candles out, many, many candles out. And that tool is available for you to try absolutely for free, by the way, once you've learned the basics. And you can learn the basics by jumping into the Alpha Trading Discord and getting the volatility starter pack and learning to trade volatility, probability, and statistics. And once you've actually learned that, and you can take your time because it's free, they even give you a free chart to use. It's pre-populated with the free indicators. And once you've really learned that, you put in the time to actually learn it, you don't have to rush yourself, you can pace yourself, then you can try a 2-week free trial of Alpha Trading's premium indicators. And why is that interesting? It's because those are the very indicators that the traders of Alpha Trading actually use to trade. You know, we wouldn't use them if they didn't work. If you showed me that slicing up grapes and mashing them together with apricots and reading the entrails of a lamb under the full moon was a better way to trade, trust me, I'd be doing that. Sorry for the lambs. But that isn't. an effective way to trade, right? And neither is EMA or SMA, RSI or stochastics, order boxes, W patterns, M patterns, wedges, right, channels, fibs, all these silly things that they market in what's called traditional technical analysis, which I call voodoo technical analysis, because that's what it is. It's silly voodoo. It's using, at best, irrelevant maths, and at worst, absolute garbage that has nothing to do with trading. Now, are there a tiny percentage of people who successfully and consistently trade profitably using those garbage tools? It turns out, yes, there are. There's about 0.5% of traders who are consistently profitable, for the most part, for some years anyway, trading with technical analysis tools like those I just mentioned in the traditional TA world. But they're absolute garbage, and those 0.5% people are just beating the odds, for the most part, because they're taking profits and they are managing their risk well, right? Which means they're limiting their losses and they're not emotionally attached to their trades. By the way, if you're one of those 1 in 0.5%, congratulations. There's nothing for you to learn here. Carry on doing what you're doing. Congratulations. But if you're part of the other 99.5% of people that lose money on trades in general, but at the end of the day, week, month, and year, look at your P&L and it's negative, and that's, again, 99.5% of you, call it everyone, just to round up, then you probably should be learning another way to trade, a better way to trade. And what are the maths that matter? Again, I've already mentioned the returns matter. Well, what are those returns again? They are the log return of investments. And what are the log returns of investment based off of? They're based off of the standard deviation of returns and its correlation to the past price action, telling you the direction of the volatility. How do you know that? Well, the standard deviation of log returns of investment is another phrase for volatility. That volatility correlated to the past price action, if you know how to read it properly, will tell you the direction of the current and future price action with extremely high accuracy. And those are tendencies, but they're extremely likely to happen. And by extremely likely, I mean well over 99%. You can learn these tendencies. We give away the tendencies cheat sheet, which works for volatility, and which works, by the way, for entropy. Ooh, entropy. Magical word there. So, we give that away for free in our Discord. Come check it out. Also, apart from the volatility and the correlation to the price action, there is the variance. And what is variance? It is the spread of data around the mean. Mean? Did you say mean? What mean? The mathematical mean of the price action? No. The mathematical mean of the returns. Right? So the log mean of returns on investment. Does it all start to make a picture now? Variance is another word for volatility, by the way, because the spread of data around the mean is volatility and is variance. They're just two different ways of looking at the same concept. And you can also tell by looking at the correlation of the variance what the direction of the price action will likely be. And again, you can do the same thing with the entropy. What is entropy? Entropy is a concept of which a very big element of that concept is randomness. Again, the market is random most of the time. And when it's not random, it's in trending mode. That's all it does. So the entropy tells you whether or not the asset is moving randomly, right? Whether or not the diffusion of the asset, right? The spread of the asset, the distribution of the asset is random, or whether it's happening in a trending move. calculate that with the entropy indicator we have. You can visualize it, and by calculating and looking at the correlation of the entropy with something like the Shannon entropy percent or the alpha squared entropy, you can see, just like you can with the volatility and correlation to price action, you can see the tendency of the direction of the current and future price action based on the entropy. And you can tell whether or not it's in a random walk or trending move. So very useful things to know all at once. And when you have all that information, as if that wasn't enough, there are tools like the returns oscillator and the entropy oscillator and the alpha laser returns. And these tools are all amazing at showing you divergences with those tools and the price action. Right? Because those are the actual divergences that are most reliable and that make a difference in your trading versus using tools like the RSI or stochastics, which are just utter garbage when it comes to their relevance to trading. Why do I keep saying that Voodoo TA tools are utter garbage to trading? Because those are not the tools that are used by the big bots that move the markets. So you can be on the side of the big bots that use the markets and therefore win most of your trades if you know how to execute your trades properly. Or you can be on the other side that the smart money considers to be the dumb money. Do you want to be in the side of the smart money? Or do you want to be on the side of the dumb money? Sure, it's easier to use those other tools, and you'll lose with the Voodoo TA tools most of the time because they're designed to fail most of the time. In fact, when you take many or all of the leading technical analysis courses, you'll notice that one of the biggest things they teach you is learn how to doubt your indicators and counter trade. Well, that's just insane and ridiculous. When you're trading with the VEPS, which is the volatility, entropy, probability, and statistics, the term we coined at Alpha Trading, when you trade with the VEPS, you don't need to counter trade your tools. You can at times if you see certain reasons to do it, but you don't counter trade them because the tools aren't accurate. You counter trade them because you think you've got a potential move happening that is hiding in hidden div, or you might potentially be seeing it move differently on a lower time frame, and so you're going to jump in and out quickly before the rest of the pack front runs a move to the other side. Whatever it might be, you're free to do it, but there's no need to counter trade VEPS tools. With traditional TA tools, you absolutely need to counter trade them because most of the time they're wrong. So if you know your RSI tool is going to be wrong 70% of the time, or your EMAs are going to mislead you 70% of the time, or your stochastics are going to mislead you 70-80% of the time, why would you use those as indicators except to counter trade them? And why would you use tools that only work 70-80% of the time if you counter trade them properly versus if you just learn how to use tools that you don't have to constantly doubt, right? We build tools that we trust. We build tools that we use. We didn't build tools that we don't use and that we don't trust. If we didn't trust them, we wouldn't use them. And if we wouldn't use them, sure as heck, I wouldn't suggest to anyone else to bother to learn them. Again, you can learn them for free. We tell you, do not buy our indicators until you've learned how to trade volatility, probability, and statistics, and until you've tried our tools, our premium tools, for free for a couple of weeks on a free trial. Once you've done that, and you've seen us use them, yourself use them, other people in the community use them, and you see that it works, then great. You can always upgrade to a paid subscription and whatever, and get full access to all the dozens and dozens of indicators that we've made available in the last couple of years. Our indicator makers are just brilliant, and hats off to them for the amazing things they've built. Anyway, again, these are reasons to use VEPS to trade, and it's why trading with the VEPS info is the best way to trade in the current market. Again, We didn't just pull this out of a hat, and there's no crystal ball involved. The reason to use it is because it is what is used by the big bad bots that dominate the markets and literally move the markets. And most of them, by the way, aren't even using entropy yet, but increasingly they are. And many of them still use normal distributions, but increasingly they're also using Laplace distributions. And we use both, normal distributions and Laplace distributions. And sure, there are other distribution models available. We don't focus on them so much because our tools are built for normal and Laplace. It doesn't mean we don't have other tools in development or whatever with other models, but because the current market uses normal and Laplace distributions and we find it to be extremely effective, we remain using those at the moment. Does that mean we'll never add other distribution models and maybe drop some in the future if ever something like normal is dropped from the standard that is used by HFT firms or big quant shops? No. Of course we'll stay up to date and current. As long as there is a market that is fluid and dynamic and changes, we'll be fluid and dynamic and change. Right? So do not get stuck and become a dinosaur by refusing to change ways. Stay relevant, stay on top of the game by using tools that are actually relevant to the existing market. 30, 40, 50 years ago, it was possible to use EMAs or SMAs or stochastic calculations or whatever, right? Bollinger Bands could have been a thing if they existed that long ago, right? But what is a Bollinger Band? It's just an SMA 20 or 22 or whatever. So those tools were more useful when there were not people trading volatility, right? By looking at things like the Black-Scholes formula or using other models that are increasingly relevant, like entropy, right? Or Laplace distributions. And you can use such tools by using our tools. We have what we call the probability boss. And we have two different versions of it. And they are intended for separate types of market. Traditional markets and 24-hour markets. And you can use them with or without drift. And drift is basically the calculation of the average tendency that markets in the long term tend to move up. They don't always move up, but they tend to. So for high time frame trades, it makes a lot of sense to use drift sometimes on certain assets, versus super low time frames, it may not make as much sense, although it still can, and people use it all the time, and it works just great. Depends on the asset and all that stuff and the different conditions. And so with all these different tools, and there are many more, including the UPM, which is the power mean band, the central power mean, and all kinds of other things, and with the Fisher, the reverse wave trend, etc., you can have a whole suite of trading tools available to you, which put you in the high league, the world top league of trading indicators, and they're available on TradingView. Why are they available on TradingView? Because TradingView is the world's largest site for traders in the retail space. With over 50 million traders, it is absolutely a phenomenally huge site in terms of charting different assets on the market. And so that's why we make these tools available in the ways that we do. And that is why trading with the VEPS is the best way to trade in today's market. And that's why I highly recommend you check out for absolutely free the Alpha Trading Discord, which you can get to the link from our website. I'll also put a link in the description of this video at some point. But it's alphatradinghq.com/discord. Or just, again, click on alphatradinghq.com and click on the Discord link. And come and learn how to trade the VEPS properly for free. Okay, that's it for now. Take care.